Going on. So, welcome to this week's video. What these basically are is I just go through a little rundown of the pairs that I trade. So that is EU, AU, and GU. So all dollar related pairs, and just sort of run through the trades that I've taken, if I took any losses, the winners, um, and just run through price and sort of try and get you to see what I'm seeing and my sort of thought process going into a trade as well. And then what we do also is go through, some potential that we may see for next week. Um, but yeah, also if you're new into Discord, there's been quite a few join recently, which is great. Um, Firstly, welcome. And if you're getting to terms with the strategy, it just know it takes time and it's not easy. It's actually really hard to get all the concepts dialed down. But I've had a few people come to me and it's starting to click for them, which is obviously great. But yeah, just keep working at it and keep back testing or forward testing and yeah, just keep going with it because once you can get in some of these trades, it really is life changing. So what I'm going to do now is actually start on GU and I'm going to go through a trade um, that was from the start of the week on the 16th, I believe. But if you look at price, you can see we did start to trend really nicely. So the move started from here. So we had this push down, and this was forecasted. We had this push down, which broke this low here. So let me just put that on. You can see we've broken that low. Okay. So that's a clear break of structure. So if you're new, we previously had a low, pull back, lower low, lower high. A bit messy here, with a consolidation range. We then broke down with this bit of price here below this low. So it's a break of structure, okay? So it's a new lower low and this makes a new lower high. So this could be our range or supply zone. And what I was looking at was this up candle, but then I looked at this candle here as it's sort of covering, so these four candles here is sort of covering that range before the initiation out, as you can see here. And that momentum started really on this candle. So I want to be looking at price to come back into this area here so we can refill and banks to put more orders, close out orders, and then potentially get short from here and see price, as we did. It's all the way down here now. Clear trend. But I took a trade in here before we spiked up. So we had this little wick that pushed above this high. So let me just put that on. We had this as the high, which is the lower high, and you can see price spiked it, which isn't unusual. We see that, it is grabbing liquidity from that high before, a few hours later, 5-6 hours, we see, this was news, FOMC, I believe, on Wednesday, if I'm not mistaken. So yeah, news which broke structure, and then we just see, bearish trend from there. But I want to get into that trade from here. So I'm going to run it back to there. Okay, so again, break of structure, which is that low. And this is what I'm looking at as my supply zone. So if price comes in, as you can see, then what I'm looking for is, let me get my mouse, is once price comes in, what we will see is higher highs and higher lows, something like this. So I want to see a clear break of structure and look for that shift from weak to strong hands. So we come in forming higher highs, higher lows. Then I want to see a break of that most recent higher low, as you can see here. And then we want to see a nice mitigation back to that, newly created order block, and then continuation. Okay. And it's also important to look out for, liquidity, a clear of liquidity, before we look to take it short, to a potential new lower low. But yeah, let me get into a 15-minute time frame and see if we can refine it. Now, I'm not always looking to refine my hourly sort of point of interest or order block, only if there's a clear area or a clear candle where price is likely to come to. So if I go to the 15 now, we do have this here. So we have this range here, then price initiated out with these candles. So we could look at this here. But personally, if price comes into this hourly sort of area, then I'm looking on my lower time frame, which is the 1 minute and potentially a 30-second or 15, and looking for my entries. So I've kept this to the left just to keep it out of the way of price, but you can see we came in with this large candle. So at this point here we are bullish and there's no sells. Just because we come into this level, we don't sell right away, we wait for confirmation. It's so important. So the 1 minute time frame, this is that hourly supply zone, as I'm sure you know. We tapped in here. Okay, so at this point here we had a high and price didn't really pull back, so we have a low down here. We then pulled back, we put in this high here. So that's this as our higher low here, okay? So once we closed above this high, we have a higher low here. Okay, so we then pushed down, pushed back up, and then we broke structure. So if I just zoom right in, you can see this is the higher low that I'm looking for price to break. And if I just put it on the wick, you can see we break below and we actually close below on this candle. So that for me is, although it's not a really clear break, it is still a break, and it's something that I would take because we do break with a bit of momentum with these two candles here. So then you can see price come back up, rebalancing, generating liquidity, and this is where we get involved. So once we broke, you could argue that you could be looking at this candle here, but as I've always said, I will take the extreme when it's one break of structure. Okay, so this is one single break, and the extreme for me is this doji candle before, the last up candles here, the last bullish close, but then we have this sort of doji before the bearish candle sort of come in, and then we break structure. So that's the candle that I would be definitely always taking. And as it's GU, I'm usually always setting my entry at the EQ. So that means the equilibrium, like halfway point of the order block. Just because on GU the stop size is a bit larger. So yeah, that's the reason for that. And with my entry, so you can see it's on there on the EQ of that candle. And I got tagged in with a 1.5 pip stop loss, which is very tight for me. Well, for GU anyway. I'm usually around 2 pips or even 2.5. But there's not much reason for me to be having, say, a 2.5 pip stop loss or even 3 pips, because I've done all the analysis. I've built my story. I'm trading from a higher time frame perspective, filtering on the lower time frames, and for me to just give myself leeway isn't the way to go about it. If my analysis is correct, then this should tap in and go from here, which is exactly what it done. So that's the reason for the tight stop loss. It's all about precision and understanding what price is actually doing. So we can see we broke structure, we're coming back up to mitigate, and then expecting or anticipating continuation, which is what we got. Now I did manage on this time frame because it is when we come back to it, it is just one single break. We haven't really had much of a liquidity being swept. We had this high here, which for me, this breaking this high here is a bit of liquidity seeking before a potential down move. But it all depends on the price action and what we're seeing. And what I usually do and what I recommend is, if you're taking entries on a 1 minute time frame, what you can do is manage on the time frame up from that. So either the 5 or whatever you trade. So if you trade the 1-5-15 and you enter on the 1 minute, what you can do is manage your trade on the 5 minute. So a time frame up from what you trade on. But for this trade, I did manage on the 1 minute. So what that means is, once we break structure and lows, I am managing at that high basically. Okay, so you can see we pushed off here and I moved to break even. I did move to break even before we broke this low, because obviously it's like 7-6%, which I'm not going to give back and turn into a loss, because that's ridiculous. But yeah, so once we sort of initiated out and moved away, I moved to break even, and then we have an entry here. So we have this consolidation range. So you can see we have a little bit of range, and I'll just mark it on. So we have this range here. We then pushed out, which isn't too much of a convincing break, but it is still a break of this low. And this is a new TradingView account, so all of my templates are gone, which is a bit annoying, so I've got to redo that. But yeah, so we have this range, consolidation, break of structure, and we have the last up candle, which is here, and we can refine it to that candle there. Okay, so if you was looking at the EQ, then you wouldn't have got tagged in. But if you set your entries, at the base of it, then you would have been tagged in there, and that's a scaling trade or your first trade. But when it comes to scaling trades, I'm not really scaling in much. I'd rather just sort of wait for my higher time frame areas. So once price comes in, I'm then looking for my lower time frame entry, and I'm really just looking at taking that first entry, or my first entry, and then just looking to manage it. Because if I didn't take this trade here, or say I missed it, then I would look for the next clear opportunity. But if I'm in the first trade, then I'm not looking to scale in. The reason why is because I'm not looking to be on the charts for hours and hours. I'd rather get in one position, or max two really, and then just look to manage it, and then get out, bank profit, and that's it really, and then move on to the next trade. And one other thing as well, once we sort of have this first entry, we push down, make a second entry. The more once we get to around 3-4 entries, the probability of them playing out is a lot lower, because once we start seeing order flow and a trend down, it's sort of building more liquidity. Because what you'll see is, if we get say 2, 3, 4 entries like this of continuations, what we then get after is a deeper pullback before price continues, and that's just grabbing liquidity before price continues, which may be mitigating something that was left. So that's the reason why I'm also not scaling in too often. So yeah, I thought I'll just clear that up. But this is what price done next. So we broke structure, we've come back into that range, broke structure again. Now at this point here, what I'm doing is managing. So once we break these lows, I'm managing at the highs. And then it was here, so we broke structure again. Yeah, so once we got to this level here, I'm managing a bit more aggressively because running around 13, I believe. Yeah, I was running the lowest at 13.5. So I want to manage a bit more aggressively because at this point here, I am expecting a deeper pullback. So once we broke this low here, we did close below the sort of candle bodies. I moved to that high, but I do manage above the highs. I think it was around 8.5 and got taken out there, as you can see. Now let's look to see what price done next. You can see exactly what I said. We pulled back deeper, which is, grabbing liquidity from me basically, and then these highs. But this, we don't really know what's happening next. This could pull back deeper. So, do you really want to be holding through this move here? That's what you've got to be asking yourself. But then you can see we do push back up. And if I just go to a 15, we do come up to wick. Yeah, we wick there. Okay, so if I go back to a 5, that was the candle that on the hourly, wicked and it took liquidity, because that's all that really is, taking highs. We always see the highs and lows manipulated before a larger move. But on the 1 minute, we can see we're still in that sort of hourly area, and we do go above it. But as I've always said, it's about how it goes above. Is it actually with momentum, or is it taking liquidity? But there was another entry, which I didn't take. But what we can see is we push up, push back down. Now it is a bit messy, but we do break structure. We have this push down here. We pull back in, and this wouldn't be something that I would take. There was another entry. If I just go forward, coming up now. So this is clear as day for me. So you can see we put in that low there, we pull back, and then we break structure. So that structure break there is very clear for me, and is something that I would have taken, but I didn't take it. I just didn't see it. I think I was not on the charts. So you can see we break that low, and we have the last up close candle here. As you can see. And then we push into that area. Now, as this is a bit larger, I would potentially refine it on a 30-second. But we come into the EQ on that candle there. Okay, ain't too bad. 2.5 pip stop loss. And I believe this is when price came in. We do have news coming up in a few hours, but if I go to a 15-minute time frame, this was a great trade. It obviously ran incredible, and the real target could be this area here for around 13. But if I just run it forward, I didn't take this trade, but that's when FOMC comes out, and ran for 40R. And if I go to an hourly time frame, okay, go back actually. Obviously, it would have been a great trade to take, because these sort of trades can make up your month, and especially, or definitely, your week as well. And this is when we start to trend, and obviously a lot of percentage, but I didn't take that trade. But yeah, after we see that news, we obviously broke structure, and so it's here. So this is the next sort of trade. So at this point here, we're seeing clear trend. We have this news that price could come back to, rebalance, but it is news, and it doesn't need to come back to this area right away, as I've always said. But if we just zoom right in, so we broke structure here, this low, but we actually wick it, we do go back up to mitigate that last up close with that wick, as you can see. We then push down and sort of a little bit of a range here. We break with these two candles. So you can see we break this low here. So this is what I was looking at, and I did forecast this. So this last up close candle here, and price came back in, and then we put in that low from there. So let's go through. So firstly, quickly, we have, what's happened there? Hold on. Okay, so we put in a new lower low with that candle, which makes this our new lower high. We have the last up close candle. We come back to it, as you can see, and then we sell off quite heavily from there. Now I did put in the Discord that there was around 50 R to be made in here, but I didn't take it, as this was, if you look at the bottom, it says 3 a.m, 2 a.m, so that's when the trade went for me. And yeah, so let's get through it. So if I just take it back to when we first tapped in, which is, okay, let me just go back to around here. Okay, so again, the purple zone is the hourly level. I'm going to move it to the left. We push in here. As you can see, we have a high, so a high, and the real swing low is here. And we break it on that move, as you can see. Now, it comes down to where would you put your sort of order on this area. If I just zoom right in, you can clearly see we've broken that low, that swing there, okay? And for me, what I can see is this little range before price initiated out, which broke the structure. Now, you could argue we have the extreme up here, but I would take that sort of range and be looking at taking that as my entry. And then obviously the EQ, you would have been tagged in here with a stop loss 1.5 and then taken out pretty much straight away. So that would be the first loss in that area, and I would definitely take that trade. Like, there's no doubt I would not take that trade, because if you look at it, we pushed in, we broke structure momentously. We have this as a consolidation range, break of structure, a bit of range here. We push up, and then we would be anticipating that sort of continuation down, but we went higher above this high here, and we sort of had the same thing here. So we push up, we put in a new higher high with this move here. We have this as our swing, or even down here as our low. We then put in a new higher high with this move. So that's our new low that I would want to see broken. And we sort of come down to test it. We don't break it here. And then we range, and then we break it with this move. So let me just put that on. So we break it there, and we have the same thing here, but it's just on a smaller degree. So if I just zoom right in, we have that range. So range initiating out, that broke the structure. Last up close, and again you could take the whole sort of range. If I can get that on correctly, there we go. And yeah, so this is the entry. So EQ, stop loss I wouldn't be worrying about that higher, because I would need 5 pips, which is way too much. 1.5 would be enough, and that would be 100% what I would be taking, as I can just see that clearly. That to me is clear as day. So we push up. Okay, so we get tagged in there. Just move that over. We get tagged in. And let's see what price does. Okay, so at this point here, you'd be at break even at least, because you're running 5R in the space of probably 20-30 minutes. And then just run it forward. You can see we're putting in lower lows, and at this point here, we're running 12R, which, you know, is crazy percentage, just from understanding what price is doing. And even managing on this time frame, you'd still be in the trade here. You'd still be in it, running around 20% of your account. Now, if you're looking at trading FTMO, you know, I think you can get a 200k account, which is dollars, which is, I think, £140 or £140,000. And, you know, this is a trade which is running 22%. Now, you can do the maths on that, but, you know, that is some crazy money, and it's all from just knowing what price is doing and understanding sort of the trades that are possible, really. And this is possible. Like, if I can do this, then you can do it. And now, I know I didn't take this trade, but I would be in this trade if I was awake. Now at 3 a.m, I'm not awake. So that's, you know, it happens from time to time, but, you know, look, we're just seeing clear momentum, and price, yeah, it's not really slowing down. Now, if you're managing on this time frame, then you probably, you would have got taken out there for 25%. If I go to the hourly, one thing to note as well, it all stems back to your higher time frames. So what I mean by that is, if we're, you know, expecting or anticipating order flow, it comes back to, we want to see or anticipate a new lower low on the higher time frames. So really, although we are managing on the 1 minute, we want to come back to the higher time frame and sort of understand that price is likely to put in a lower low below this level here. And you can see, look, the next candle, go back to the 1 minute. We did pull back there. And then on the hourly, we did eventually put in that lower low. Now you could, how do I put this? You could cut yourself short if you're managing on a lower time frame, but then we don't always know what price is going to do. We just have, you know, sort of our anticipations and our sort of, you know, our what we've come to backtest and what we're familiar with. But when we come back to it, what we have is a lower low. So we put in a new lower low. We broke structure. We have the last up close candle, which is here. Price came back in. We dropped to a lower time frame simply for our entries and, you know, to be more precise with what we're doing and our entries. Because if we're on the hourly, there's no way in hell that we can get a 1.5 pip stop loss. It's just not possible. So that's what we use the lower time frames for. But then we come back to the higher time frames and remind ourselves that the very first, like at a bare minimum, the very first target should be this low before we can anticipate sort of price doing something different, whether that's pulling back, breaking a new high. So that's one thing to keep in mind. It comes down to how you test things, and because if we look at the hourly, look, we're running around 52% on the hourly time frame on this trade. So if I run it forward, we do pull back and then we put in a new lower low, as you can see there. But the lower time frames, you know, we simply use them to get in, precise, and just look at that precision there. So let me just get it on correctly. That is clear precision, and that there is just understanding the why of price, why it's doing that, and taking full advantage. Because other strategies, other communities that you've probably heard of, the big ones, they can't do that with a 1.5 pip stop loss. It's just simply that they would just laugh at that. If you said you're using a 1.5 pip stop loss, they would just laugh. Because they're using 40 pips, 50 pips, and looking at their bear flags, and it's, once you have a more deeper understanding of like your craft and what you're doing, this is not easy, because it takes a lot of experience and a lot of hard work. But once you put it in, you can see this, and it's just crazy. And then you can see it melted after tapping in, and we see a deeper pullback after putting in the hourly lower low, which is expected. And so let me just run it forward. Now, don't get me wrong, that was definitely a trade that I would love to have taken. And obviously it's hard to hold it for this long, but if he was in it still, you would have had a low of nearly 100%. And how long is that in? So that took 19 hours, which is crazy. But let me just delete that off for now. That is the trade that I would have taken. So the first loss, 1%, then the second win for, crazy percentage. And so this is where we are now. So if we get into what we can expect for next week, we can see we've broken this low here. As you can see, we've broken that low. So, we can obviously put on the order block, which is here. But now price, we've pushed down quite nicely, nice bit of momentum. And we've pulled back, and we have broken that low, but closed above. So, as we've now pushed below that low, what we may see is a push up back into that level here, and then get short from here. But it's unlikely that'll be on Monday. And what we may see is, a push up, sort of pulling back a little bit, break structure again, and then look to get involved in that new area. We are seeing, a clear trend as well, but it hasn't got to continue. It's all about sort of not expecting, but reacting to what price is doing. So if we see, Monday, it could just sort of range for a little bit more and then break structure again. If that's the case, then we'll be looking at that, new area to get short from, and just sort of trade the trend, because we are trending. So there's no real reason why we should be looking to get long just yet. If we mark on this area here, we have a little bit of imbalance, as you can see, from wick to wick. So inefficient pricing. So we may see a deeper pullback into that area, a bit of liquidity being built, a sweep of liquidity tapping into this area here, and then look to get short from that area there. But as I said, we may just continue down from here. And if that's the case, then I'll be looking at price, seeing what it's telling me, and look for sells. But one thing we may get is a push down and a push up like this. So if we get this, then obviously we would have a break of structure from this high. I'll be looking for price to come back into that area and look for that shift in momentum, and be looking at that area there, which would be, a new order block, another order block there. And if we get that, then a clear target for us would be here for a first target, and look to see how price reacts in that area. But yeah, as I always do, I'll wait to see how markets open and go from there. Look to see what price is doing on Monday morning, and I will send through analysis. Now, if I just get into EU, and we have a very similar, they're all dollar pairs, so they are similar. If you look at AU as well. So what I'll do now is cut the video off here, and I'll go through some trades on EU and AU, and yeah, so that's going to do it for GU. A little recap, some great opportunities within the week. We had this area here to get a short from, break of structure, a clear area of interest. We had that range, liquidity, and then price then had a reason, to push down. Okay, and then we see a clear trend. Now I did put in Discord, on the 16th, GU starting to show signs it wants to trend, and that was at this time here. We tapped in, and then look, you will see a clear trend. Now that's just from a bit of experience, knowing price, and yeah. So this was NJ, so New Zealand yen. This trade, where is it? So yeah, I took this trade here, which I will go into. That's a long-term sort of investment strategy, which didn't, I got out of the trade, but for some nice profit, I got out, and then price did impulsively move down. But I'll get into that that strategy. It's the same, but it's sort of just on a higher time frame and looking at the larger picture, really. But yeah, that's AU. I took that trade there, very clean. And yeah, so I'm going to cut it off now, and I'll get into EU and AU. Okay, so I'm now on EU, and as you can see, we have similar price to GU in regards where we've seen after this news candle, we've just been putting in lower lows and lower highs. Now, if I just zoom right in and look at more current price, we had this area here, so we pushed down with this move that broke this low. So if I just put that on, we can see we broke that low with that candle there. But I wasn't really looking at this to get involved, because as you can see, I've put on that last up candle order block there. Price came back in, and then we put in a lower low from there, breaking that low there. But I wasn't really looking for this, because what I like to see is a nice clean break, which actually pushes away, showing momentum, and pushing away from that low. But what you can see is we've literally just closed below it, literally by a pip or two, and it wasn't really showing much momentum, and it doesn't meet my my personal trading plan. Now don't get me wrong, it still played out, and we did put in a low, but it's still valid, definitely still valid to take. If you drop down to a lower time frame at this area, there's entries to be taken. But yeah, it's not something that I look to take. I like to see a nice clean break, something like this here. It's clearly pushed away from that low, and even here we've pushed away, a wick, but we still pushed away from that low. But it's still a lower low, lower high. Price came back into that lower high, and then we went short from there. It's still valid, but yeah, it's just not super high prop for my, what I've seen in my testing. But if we just cast back to last week, and last week's video, the breakdown where we was looking, so we was here, wasn't we? So we pushed down, and I was saying about, if you go back and rewatch it, I had this line on here where the imbalance, the most seeable sort of imbalance on this candle, where I was saying price could sell off from here, and that's exactly what happened. So why else did price come to here and sell? Well, if I mark on the high and low from swing high down to the swing low, so what we can see here is we have a low, and the lower high up here. So this is the swing high and the swing low. Now, once price comes into or above the halfway point, that's considered a premium price. So if you're a beginner, what that basically means is anything above the EQ point or the halfway point is considered a premium price. So if you're selling anything like a product, then you're going to be wanting to sell that at a premium price so you get more money. And the same goes for if you're buying something, then you want to be looking at getting a discount so you can save money. So it's the same concepts in trading. We can see price traded above the 50% mark. So we can see along with that imbalance, this is saying that price is, it's pulled back enough where it's now at a premium price, only slightly, but it's still above that 50% mark. And, that's why price then sold off. But if we're looking at buys, it's just the same in flip. Anything sort of below the 50% is considered, a discount range, and we can be looking at buys. So yeah, you can see price came into that level, and I went to the 1 minute time frame, and I'll take it back to here. So that line above, which is here, is indicating the imbalance and sort of the discount range as well. So price came in, and we came in with these higher highs and higher lows, as you can see. And, we had this break of structure here. So we broke this high, last down candle, we reacted from that, and we pushed off from there. And then what we got here was a bit of liquidity from these lows. So we had equal lows here, and we broke structure with this move. Now, it's not really a convincing break, but you can still see that shift of momentum. Whereas here we're putting in higher highs and higher lows. Then price failed to put in a higher high here, and it actually put in equal highs. And then we actually broke structure. So the first time we actually broke structure was here, and we took liquidity. So I was speaking to someone in Discord. I think someone else took this entry as well. But as you can see, we did not get tagged in. So the last up candle is what I'm looking at, which is here. And then, we broke structure. So I did set an entry. Now, as it's EU, I set it at the bottom of the order block because, it makes sense, because my stop loss can be 2 pips, which is above these wicks here. And you can see price didn't tag me in, and then we just showed some nice momentum to the downside, which ran for 11%. Then we pulled back, and but I didn't get tagged into the trade. And if we go back to the 15, you can see that imbalance. And then once we got into that discount range, we started to see a price sell off, and back to the hourly, you can see that. So if I just run it forward, we do range for a bit, and then we see that, huge momentum, which was 7 p.m, which was the news, FOMC. And so then after that, we started to see trends, as you can see, and that's where we are now. So I just thought I would cover that little tip, as when we're looking for premium, we want to buy at a discount and sell a premium. That goes without saying. But what you want to do is look for the swing low and the swing high, mark it on by the wicks, and once price trades into that above the 50%, then we can that's considered a good price to sell. And then you can see we reacted from that, the imbalance as well, and then we pushed down and we're putting in these lower lows. And I've got to stop recording because of my dog. Back to it. So what I was saying is, just that little tip on premium and discount. Buy at a discount, sell at a premium. But if we look at current price, I don't want to keep going over the same thing. It's exactly the same as GU. You know, the way I teach and my methods is all about keeping it simple, and you know, not just talk a load of rubbish and just keep going on. It's literally just black and white, simple. So we're seeing trends. We obviously have a break of structure here. So if I just delete this off or put that down here. So we have a break of structure, the last up close candle, which is here, but I would refine to that little doji candle right there. But if price comes back to that, you know, we don't know. We've got a bit of imbalance, you could say, but we have a wick and we closed above. Then we had this candle that closed below that low there. So price we may come back into that level there and look for some sells, but as it's going to be a market open, we may open, break that low and just sort of mess around for a bit. But one possible scenario is we put in a low and then we actually show some momentum to the upside. If that's the case, then I'll be looking at that break of structure and be looking to get involved on the lower time frames. So what we would have is that first break of structure, and we can look to get long from that area on lower time frames. And what's going on? Okay. And then we would have a second break of structure here. Now this is just forecasting, you know, this may not happen, but a single confluence would be this first break of structure and look for entries within that. A double confluence would be two breaks of structure and, you know, entries within there on lower time frames. But as I always say, I like to see price show its hands and react to what price is showing me. But yeah, as I always do, I'll wait for market open Monday morning, reanalyze, reforecast, and then just get ready, and I will send through analysis as Monday sort of progresses, and yeah, go from there. And I'm going to go through AU quickly, and again I won't go through it again because it's literally the same. This low is now, you know, we have broken that low there, so it's just the same forecast. We do have an area here. We may come down, seek liquidity from that low, push back up. Now if we do break this low here a bit more and then we push up and break this high, it depends how it breaks. As I always say, it depends how it breaks that high. If it breaks in the form of seeking liquidity, then it's not really a trend change. We may just be tapping into that order block there and then get short from here. But if we break with momentum, then we can look at, you know, looking for longs at that new sort of demand level and look for, you know, a shift in momentum and look to get along from there. But it depends how price is and how we break. So that's what I always say. It's about how price breaks. But AU, what was the trade? So let me just go Discord. So one trade at the end of the week on Friday, which is this one here, which I'll go through, but there was one other. I'm just seeing if I posted it. Okay, so I think it's this area here where we had a break of structure. So let me just go back just before this candle here. And we had this break of structure here. Last up close candle. And we see price sell off from here. And we had, so this was our low, okay? I went off track there a little bit, but we have this low here. And you can see that was the low. Price broke that. And we pulled back and broke another bit of structure, but we have this area here up higher that price will likely need to come back to before selling off. And as you can see, we did. And there you go. but I'm not going to get into that trade. I'm going to do that in a separate video and just focus on the trade that I took on Friday, which I'll get into now. So firstly, let me just see if it's on here. So I need to refresh my mind because I can't always remember. That keeps happening as well. Okay. So we broke, I'm going to take it back to around here. Now I'm always referring back to the higher time frames, and then looking to trade, you know, that continuation leg into a new lower low, which is what we had here. Okay, so we broke structure to the left. I was looking at this candle here. We didn't reach it, okay, but we did feel an imbalance. So if I just mark that on, this is the low. We broke that. Break a structure. And the last down candle, or this candle, doji, is what I'm looking at. Price didn't quite come in, but let me go to the 15. And what I was looking at was, I think I put this in the AU channel, but that candle there, we came back up to rebalance that, you know, inefficiency from wick to wick and wick to wick as well. So although price didn't come into the hourly order block, I will still take trades from that imbalance. So that's exactly what I've done. So the 1 minute time frame, we came in, as you can see, and I need to go back to Discord, and I say I've missed that trade, but I didn't miss it because I wasn't on the charts at that time. But it is a missed trade, but I wasn't really looking at that at the time. I looked at this one here. So as you can see, I put on 15-minute imbalance, hourly point of interest, price just fell short of that, but it doesn't need to go up into there, which is this here. Okay, so what I was looking at is a break of structure. So we had this high, low, we broke structure, but then we pull back and we break structure again. So this is not the extreme. So this is two separate breaks of structure. So I'll just put it on, we break that low. And what I was looking at was that range, or that candle refined to the bearish candle. So last up close refined to that candle there. As you can see, I'll place it on right there. Price came in and then we pushed back down. We had these equal lows. We didn't break structure until, well, we broke lows here, but the next super clear sort of entry was here, which is what I took. So we broke structure and we have a clear candle that we can look at, as I'm sure you can see, which is that candle there. And price came in, you know, super clean entry, wicked in just, and what was my stop loss? It was that 319? Yeah, 2.5 pips, which is above the high, you know, more than enough. And my trade did run for 14R, but I managed this very aggressively because it was Friday, so I got out here. So once we broke structure, moved to break even, broke here, I moved to that high, and then we had this low, we pulled back, broke low again, and I moved to that high there. So I'll just mark that on. It's 8.72, just below 9%, and I got out there once price pulled back, and then you'll see what happens next. We just continue, and we put in a new low with that move there, and there was some more trades. So you had a trade there, so we broke that structure Doji candle, we tap in and then we continue. And again, we have the same thing. We break that low again. Last up close candle is here. Price tapped in. So these are trades that you could take, which obviously played out lovely. And then we do push up a little bit. You know, there's entries within entries really. We break structure again. You know, the move started from here, last up close. We come in and we respect it. But the longer that this goes on for, the more liquidity building. So it's more calls for price to push up before potentially moving down, which is exactly what happened. So I'll go to a 15. And back to the hourly as well, because you need to remember, we're trading with the anticipation that price is going to put in a new hourly lower low. So the very first target should be here. But I did manage aggressively, you know, because it being Friday and obviously a great week already. So banking 8-9R to add to a week is just, you know, obviously it's great. But yeah, this is where price is now. And as I've said, I'll be waiting to see what price does. But that's going to do it for this week's video. I hope you took some value away from it. As I always say, you know, hit me up in Discord, any questions you have and any trades you want to share. Any mindset, psychology tips, whatever you need. I'm always here for, you know, support and guidance. But yeah, other than that, I hope you have a great Sunday and let's hope for a really good week in the markets. And yeah, let's make some percentage.